Good day traders. In this video, I'll be showing you guys how to follow Forex signals channels. If you're watching this video, then it means you're in either one of our free channels or the advanced Forex signals. Now if not, then you better head over to our uniforexdojo.com and register immediately. Now before we get started, hit the like button and subscribe. Don't forget the notification bell as well to get the latest uploads, which will definitely make you a better Forex trader. Now our channel is pretty easy and straightforward. Take note, we only risk 1% of our trades, and to understand your risk management, just hop over to our free Forex tools video and check out how to position your sizes better. Now firstly, we post trade ideas we are considering for the day, which will mostly just be an error on a chart with a few areas of interest. Once you've done the groundwork on the potential setup, a post with clearer entry zones, stops and targets will be posted. It will look something like this. So as you can see, the post is very detailed. You have the entry point, stop loss, target 1, target 2 and target 3. Sometimes we get up to target 6 or 10. Now the entry point is where we would most likely decide to either sell or buy whichever pair we are looking at. The stop loss is a price point where it invalidates our trade idea for that moment. Target 1 is where price will most likely turn or struggle before crossing. Now this is where we usually take half the position and adjust our stop loss to our entry price. We always try to take as much out of the trade as possible. And sometimes this zone is below our desired risk to reward ratio, which is okay. We'll not always get the perfect entry. Target 2, now this is a comfort zone, whereby price is definitely heading our direction. We adjust our stop to target 1 to ensure we keep more of the profits. And then target 3, now this is where we let our target run. So in other words, we either adjust our trail stop, we either adjust our stop loss to either target 2 or leave it at target 1 to give it more room to breathe, or we remove everything and just leave the trail stop running as is. After this, I'll also publish an image with the specific details of the trade, which looks something like this. Now this image will help those that do not necessarily want to manage the trade as and when price develops. So as you can see, it shows the entry price, stop loss and target profits. The best way to try and take as much out of our signals without constantly having to look at charts is by splitting your trades into two. For example, if you're trading standard loss sizes, number 1, you'll firstly place half the position with the first TP. Number 2, the second trade will be placed with the third TP or no TP attached. Now take note, it's ideal to have a TP in place just in case you can't get to the charts. You will then place an alert to be notified when price hits your TP on the first trade. Now once trade 1 hits your TP, it will close, which will notify you. You'll then move your stop for trade 2 to the entry price. You'll then set an alert for TP2 on your second trade, of course. Once TP2 is hit, you'll adjust the stop to TP1 and either let TP3 run or attach your trail stop. So that's how we place and manage our signals. Another factor to be wary of is how your leverage and spreads affects you. Cost of your positions is very important. Now, if you have higher spreads, you may find yourself being closed out of positions too early and therefore either taking unnecessary losses or not enough pips to remain profitable in the long run. Other factors such as rollovers and swaps also add up to your costs increasing. Now, we hold positions until it's absolutely necessary to close, and that's when there are no more pips to take, which may take a while. So check out our blog post on brokers to be on a better position in your Forex trading journey. So just hop over to www.uniforexdojo.com and then hit blogs and just read that piece. Happy trading, traders.